Bunnings is a retail beast, a huge market player in Australia and New Zealand's hardware market. With more than 500 stores and 55,000 staff, it makes 5 million transactions every week to everyday consumers and commercial tradies. It's owned by Wesfarmers, the Australian-listed retail giant, which also owns Kmart. But Bunnings is the largest business in the group, collecting 18.5 billion Australian dollars in revenue last financial year, about 43% of Wesfarmers' total top line. It's also one of the company's most profitable divisions, with an 11.9% pre-tax profit margin, compared to Kmart's 9.2%. I'm in Melbourne to meet with the man in charge, Mike Schneider, who's been with Bunnings for 20 years, the past 9 as its managing director.
So consistency over time does build trust. They are fiercely competitive markets that we operate in, both in Australia and New Zealand, and we have world-class operators.
In this interview, we discuss Bunnings' growth over the past 3 decades.
And we recognise that there is a lot of profitability, but it does come from running a very low-cost operating model.
And how the company thinks about expanding into more categories.
So we're very rational, we're very disciplined, we're very strict on how we allocate capital to get the best possible returns, rather than doing it sort of irrational or certainly not anti-competitive.
20 years you've been with Bunnings.
Yep.
You obviously didn't start as managing director though, so
No.
you've moved your way up.
Yep. Yes, I started in 2005 in Sydney, which is where I grew up, as the state manager for New South Wales ACT, but actually started my retail career on the shop floor, working sort of Thursday nights and Saturdays as a casual. Different types of retailing, department stores, even the Warehouse Group when they were operating here in Australia. So yeah, career retailer with a few short years out in banking and finance, which for me reminded me of why I like working in retail so much. So yeah, it's been a great ride so far.
You left and went to finance and then you gave
Came
that
back
up
to
and
retail,
came back.
100%, yeah. So, but it was a great learning experience as well. But love working with teams, love working with customers, love being around product. And I think, when I came to Bunnings, I didn't have any sort of vision of what I'd be doing 20 years later. It was sort of need a job, young kids, mortgage, school fees, all those sorts of very normal human things. But after a little while I went, this is somewhere I can see myself staying for a long time, and different opportunities came along and you take those chances, and this is where it sort of turned out.
I'm interested if there's anyone you look up to in retail globally. Are you a Sam Walton guy, or is there someone else that you think is incredible?
I think Bernie and Marcus, who founded the Home Depot, are pretty special. Sam Walton, quite a number of executives, but there's so many fantastic retailers out there. And when you live in Australia and New Zealand, you are acutely aware of how far away from the rest of the world you are. And we are really keen students of our format, but all retail formats across the globe. So our teams are out travelling. We send a lot of our leaders on study tours to the US and to Europe, South America, so that we can keep finding what we think is best in class and then bringing it into our market. And actually last year we brought 37 of our global peers to Australia and New Zealand for sort of store tours, so that they could see what we're doing, see some of the ideas that we've probably stolen from them, but also to help them to take those ideas back, which is really lovely.
Do you know if they've stolen any ideas from you?
Oh, we know a few of them have picked up on a couple of the category expansions. We know that Home Depot have taken the way that we lay out and manage our tool shops very much to heart and inform their thinking on how they do that. So I think there is this sort of quite collegiate sort of feel between many home improvement players around the world.
I really want to understand the strength of Bunnings. It is such a retail powerhouse. I'm really interested in your mind what you think has resulted in it becoming such a hardware behemoth. Do you think that's anything to do with the New Zealand and Australian psyche, our kind of consumer behaviour, or is it down to your strategy?
Oh, I think it's a combination of a number of things. I think there is definitely a deep love in Australia and New Zealand for our homes. We definitely know that once you are in the housing market as either a renter or a homeowner, your participation in the Bunnings brand does lift. We've been very consistent over a very long period of time from a strategy point of view, which I think that consistency really does drive customer trust. We're deeply invested in having the lowest prices for our customers, the widest range of products that can make your house into a home and maintain it and help it grow as your family grows and changes. And no matter where the touch points are with the business, we want to have a really great experience. So whether that's our designers in your home, our trade account managers on a job site, whether you're in one of our stores or on any of our digital platforms, we want that to be the best experience. So consistency over time does build trust. They are fiercely competitive markets that we operate in, both in Australia and New Zealand, and we have world-class operators, but their formats just differ. New Zealand a little bit more obvious with Mitre 10 Mega and Bunnings, both big box warehouse formats, and obviously you've got places as well. In Australia it is different. We have a very competitive set of independents that work across a number of different categories and channels, including pure play online. So we have to work really hard every day to be chosen by customers as well.
I am definitely keen to talk to you in more detail about competition across both markets a little bit later on, but just on the kind of vibe of Bunnings, what do you think makes that vibe, and how do you then capture that vibe and ensure there's quality control of that culture that you speak about across all those channels when it's not something that's under your roof necessarily like online?
Yeah, it is tough. Like, we operate hundreds of stores across 2 countries, lots of different climatic conditions, cultural conditions, geographic conditions. But it is our team. At the end of the day, our team make everything that we do happen. We invest a lot in recruiting the right types of people. We have 6 generations of people in our workforce. You know, team members as old as 80 and as young as teenagers going through high school. And we work really hard to recruit, particularly around culture. We think we can teach most of the rest, although we do benefit with our older team members from coming from different walks of life, ex-trades, ex-builders, nurses, police officers, you name it, we have them working in our stores. And they bring a real life experience, not only to sort of help support our younger team, but to provide confidence to customers that they can take on different DIY projects and get them done themselves. So team are very much at the heart of all we do, and particularly from a cultural point of view.
I was going to ask you about exactly that. The age distribution in your staff would probably be one of the widest of any business I can think of. It's often people's first job and also their last job.
Yeah.
And how do you keep that consistent across thousands of staff across your hundreds of stores?
Yeah, close to 55,000 team in our team.
Massive.
I think, you know, as I said, it starts with recruitment. Recruit the right people, and we don't always get it right, and we don't always deliver the best experience, and we recognise that. We're a human organisation. From time to time, things can and do go wrong. We work hard to learn from that and fix it and put it right. But if we recruit well, whether it's your first job or you're thinking about a second career at your end of your professional career and just want to fill in a few hours a week and earn a bit of extra money for around the home, we want to make sure that once you're on board, you're inducted really well. We invest a lot in reward and recognition. We invest a lot in product training. And one of the things that is unique about Bunnings is we skew very much to a focus on permanent work as opposed to casual work. So many.
That's interesting for retail. Super rare.
Yeah, it's very rare. So about 80% of our workforce is permanent. So it's either permanent part-time or full-time, and that drives a really high level of retention. From a business point of view, there's a cost of doing business advantage to that because we're not churning team members and having to recruit and retrain and those things. But it also means that our team put down roots and grow with the organisation. You know, our longest serving team member is currently at 66 years of service.
That makes your 20 years look
like
nothing.
I'm still on probation when you're compared to that. So Bill Cooper's
still on the trial period.
Yeah, Bill Cooper's his name. He works in one of our stores in WA. We've got team at 50 years, 40 years, 35, 30, and not talking, you know, 10s or 20s. We're talking thousands of team members. So that experience really does drive culture, and it reinforces the positive elements of what we strive to achieve.
I'm super keen to hear your thoughts on the state of the economy in both countries, Australia and New Zealand, because you would probably have one of the most clear frontline perspectives on the variances between the two. What are the differentiations? What are you seeing?
We see it through a couple of different lenses. So, you know, about 60% of our revenue comes from what we will call our consumer customers, so DIYers like you and I, and 40% comes from professionals and trades. What we see on the trade side is that there's still government spending, there's still spending in lighter commercial and sort of procurement type activities, which keep business running, and that kind of makes sense. The housing market is really tough, and particularly when it comes to new builds. You know, you've had a lot of interest rate reductions in New Zealand compared to Australia. We've had a couple here. They haven't stimulated in either country the sort of growth that we would anticipate. In Australia, we are mired in a lot of bureaucracy and red tape when it comes to planning process and compliance.
You think more so than New Zealand?
Potentially, yeah, potentially.
Wow.
And we've got a very different, obviously, political model where we've got state-based politics, local government as well. So, excuse me, you've got a slightly different sort of construct in New Zealand. And I think that does allow for some things to move a little bit more quickly in New Zealand than perhaps they do in Australia. And then there's a shortage of skilled labour, you know, particularly in trades. Most kids now finish year 12 and head to university. We need more of those younger people going into trades, and you know, we're hopeful that, you know, in the years to come there's more incentive to get people undertaking trades. It pays well, it's a great career, but it's not something that's presented as readily. So those are sort of barriers to why the housing market's not working. If I shift across to the consumer, what we're seeing is a real focus on value. And as I said before, the work that we've done over the 31 years that the Bunnings warehouse format's been evolving is really an investment in trust and value and a strong value proposition. So when your tagline is lowest prices are just beginning, you've got to work hard to deliver on that every single day. That earns us the right to be chosen. And when people are doing it a bit tougher and there is that focus on value, I think retailers that can deliver that earn that right to be chosen. So we see resilient performance, but it's certainly pretty tough.
On that 60-40 split between everyday consumer shoppers like you and I and then the commercial trades, are you comfortable with that split, or would you like to see that change to be more even perhaps?
Definitely our strategy is to get it more even, because we think that creates a level of resilience in our model. At the moment, the commercial side of the business is a bit more restrained and a bit more subdued than the consumer side, and we've seen that trend now for probably 18, 24 months. But there's been times when it's been completely reversed. In fact, in New Zealand, because of the heritage of the Bunnings business, which was BBC and Benchmark, we're at 50-50 in New Zealand. It's the work here in Australia to sort of continue to sort of drive credibility with trades, to really engage them more. And we're doing that through things like refreshing our tool shop, expanding our professional categories, offering different product ranges and services to the trade to really show the value of the proposition at Bunnings. This is professional grade. So as a DIY, if you're buying this, you're probably over-speccing to what you need. But some people buy
this is hardcore.
Yeah, but there are also people that, are what we would sort of almost call prosumers, right? So they're very skilled. They might have done a trade and not practice it, or they might be a handy person. Or you just like the brand. DeWalt invests a lot of money into, McLaren Formula One racing team. If that's your team, advertising works for a reason, right?
What are you rocking in your tool shed? Are you Ryobi, you Milwaukee?
It's a little bit of everything, partly because I like to test different products and quality. Both Ryobi and Azito, which is here, are both exclusive to Bunnings. So you won't find these in any other retailer here in Australia. Azito is unique. It's owned by a tool company out of Europe called Einhell Tools, and they rebranded to Azito for us here. And we've got an incredible partnership as well, with Ryobi. But my son, who's a carpenter, he's definitely into the professional tools. So Makita is his weapon of choice, and sometimes I get his hand-me-down. You're in one of our tool shops now. We've reimagined these over the last 18 months. We've added a lot of height. We've brought a higher profile of the brands to the front of the tool shop. We've lit them up so we can really showcase not only the quality of the products, but just how good they look and feel. We've worked hard to make sure that our displays, they're very tactile, so you can get a feel for the product.
Can you pull it out?
No, these are all locked down because unfortunately these are very popular with people who don't want to pay for products. So
I was going to ask you about that.
We tend to sort of have these, and for some of our more valuable products, we actually will see perspex across the front to protect it.
Are these empty?
These are products.
This is a high trust society operation right here.
But we also have a sort of a checkout here in the tool shop. So as I said before, this is one of those ones that Home Depot has picked up on as well. But you actually pay for everything here before you leave the tool shop. So we've got some level of control. But on some of the really valuable products, we do put another layer of security in, which is actually put perspex in. You can see the product. The team will get the product out for you and then take you to the register.
You are effectively, as a building product supplier to commercial trades, you are the stabiliser really of building products into that supply chain. How do you view Bunnings' role in that, how critical it is to fuel construction and broader economic activity and then create value across both economies in Australia and New Zealand?
It's a really important question that you ask, and I think what we've come to understand is the essential nature of the retailing offer that we have, and that sort of played out in the pandemic where businesses like Bunnings were available to be open for both consumer and commercial customers so that essential repairs around the home could be undertaken. We definitely understand that for the million credit account or Power Passes, our credit program is called, customers, that we are a really important part of their supply chain. But equally important, and sometimes I think misunderstood or not noticed, is the role that we play supporting our supplier partners as well. So the existence of Bunnings means that if you're manufacturing paint, as Dulux do in Wellington in New Zealand, or in Clayton here in Victoria, or if you're PPG manufacturing paint here in Victoria, there's jobs in those manufacturing places. We run our own manufacturing sites for frames and trusses here in Australia as well. But we've also got thousands of sales reps and support people from our supplier partners. So I think that we sort of sit in the heart of a really interesting ecosystem that is providing those essential goods and services for businesses to be able to run and operate, and for us to be able to run and operate our homes, but also the livelihoods of the people that are supplying products to the business as well.
I hope you're enjoying this episode. Before we go any further, I wanted to remind you that New Zealand was the first country on the planet to launch Starlink's direct-to-cell service. All thanks to One New Zealand doing a deal directly with SpaceX. Even Gwyn Shotwell, SpaceX's president, my dream guest, has been personally posting about it online. So how did One NZ pull this off?
Just making a big move and moving with pace. Basically New Zealand at its best.
I mean, New Zealand is amazing at pioneering in space tech, so surely the uptake's been huge, especially from businesses.
Well, the most progressive ones, yes. Those businesses looking for massive productivity and health and safety gains, for sure.
Come on, New Zealand, we're a country of innovators. We can launch satellites from our soil, but actually using the services they provide, that's on us.
Here's an example of the orange ticket. Now this is really interesting because the Zito is exclusive to Bunnings.
So who else is selling it at what price?
So this is a really interesting part about our commitment to lowest price. What you've got here is our buyer and our category manager will have determined that this product, there is an equivalent product. It might be a Black & Decker product or it might be another brand where the specifications are so close that the only real difference is this is red with a Zito on it. And because we want our customers to really trust we have the lowest prices, we're matching or bettering the price of a product that actually isn't that product in a different retailer. So we work really genuinely and sincerely to deliver on that lowest prices commitment.
Bettering by how much?
It would vary. It would vary between 5 and 10%, and sometimes it's just an equal match. One of the things we recognise is that lowest is making sure that we have the lowest price in the market. We're also a rational operator. Once you start irrational price wars, retailers miss out for sure, consumers can miss out for sure, but actually what will happen is suppliers will actually make a choice to not supply to an irrational retailer. So the suppliers have an enormous amount of their own market power, and if we don't treat their product or their brand with respect, they'll find a different channel. And there are plenty of channels out there, both physical channels and digital channels, where those brands can go. And in fact, there are brands that choose not to sell through Bunnings. Weber in barbecues, Clipsal in electronics, Milwaukee in power tools, which again I think underscores the fact that the market is much more competitive than some would have you believe.
Your motto is not only lowest prices, which I am keen to go into more detail with you about soon, but also widest range. And I've heard you say before that Bunnings really sells 365 products, meaning that they're kind of in demand for most of the year. But obviously there must be some seasonality associated with that. Outdoor furniture like this, more in demand closer to Christmas, barbecues and things like that. Can you take me through a calendar year at Bunnings and the category demand and how it cycles typically?
Yeah, it's really interesting. We see, if we sort of start with January, you see a lot of DIY activity. So, you've got families on holidays. We'll see a bit of a spike in camping products for those customers traveling away and camping, but a lot of people doing things around the house. So decking oils, paint, gardening products, obviously, height of summer in both countries. So plenty to be done in the garden. And then we sort of see a little bit of a shift as we sort of move towards Easter, which is the next big trading period for Bunnings. It's something unusual in both Australia and New Zealand. Our stores were all closed on Good Friday, and we reopen on Easter Saturday, and it's like Bunnings has never been open before. The stores go crazy, particularly if the weather's good. But again, it's all about projects, a lot of outdoor projects because the weather is still pretty good, but also you're getting homes ready for winter. So we're starting to see the sale of indoor and outdoor heating products, rugs, all sorts of things, but a lot of inside the house projects as well. So we see a lot on lighting as daylight saving ends and houses get darker earlier and don't get lighter till later. All those sorts of things, and a lot of other activities, kitchens, bathrooms, laundries, because you are spending more time at home, you're probably observing things that aren't quite right. And then we sort of start to cycle out and we get to the really fun part. We've got two big events, if you like, that we sort of focus on. So an increasing penetration into the Halloween market. We're seeing societally, both Australia and New Zealand, following the US, and we're seeing really strong growth in Halloween products every year.
Interesting.
And we've really become a home for festive. So Australians and New Zealanders love to light up their homes. We don't have the sort of snow and the cold of Europe and North America, but we do love to still light up our homes and ornamental gardens, those sorts of things, to really promote the Christmas period. So they're very strong. But alongside that, you've got spring and Father's Day. Father's Day, really important for us, as is Mother's Day. But certainly for Father's Day, there's a lot of sort of destination, whether it's gift cards, tools, power gardening, very, very popular. And then we're into spring, and spring is all about the garden. Interestingly, it's all about heat in the soil. So a lot of people sort of think the weather just needs to be sunny. You need it to be warm as well. We need the soil to warm for everything to start to grow, whether that's roses or lawns. So we see fertilizers and chemicals and pruning equipment and power gardening. And then we're sort of into Christmas, which obviously is very busy. The other shift for us that we've seen probably in the last 5 years is the pull forward from what were traditional Boxing Day sales into what's now sort of, Black Friday and that sort of period. Being an EDLP retailer, we don't run sales, we don't run promotions, we don't run discounts, but what we do is work really hard to buy really interesting products that are usually adjacent to the core categories of Bunnings. So you might see ice makers or air fryers or things like that we buy and sell at an incredible price to really participate in that period, but also to drive traffic at a time when the retail market's particularly competitive. So that's a bit of a potted history of 12 months at Bunnings.
The reason I ask is because I wonder in which categories you make the most margin. I imagine you would make more on the Christmas and Halloween goods that are in demand for a sort of short peak season versus things like tools that are quite expensive and you don't want to slap too much of a margin on them for tradies.
We don't call margin out because we're not obsessed by it. What we're obsessed by is the value proposition for the customer. So yeah, for sure, there'll be categories with higher margins and categories with lower margins. Really what we're looking to do is make sure that we are buying at the absolute best price and really making sure that the value proposition when we do the market research, so that when a product comes to market, it's coming in at the best value for our customers. We're absolutely focused on that. And if we have to lower price to respond to competition in the market, we absolutely will do that, and we're very quick to do that to make sure that we're honouring that lowest prices is just the beginning piece. But by keeping the team focused on the customer, by keeping the team focused on value, we actually drive our productivity loop, which is driving more customers to store, which drives more sales, which allows us to be more efficient, which is allowing us to actually reinvest in price to go again. So that's more of how we sort of think about the operating model at Bunnings than perhaps some other retailers do.
Totally respect that you wouldn't want to give certain stats on category margins, but I've seen different numbers out there on your profit margin and I'm genuinely confused. I've seen a figure more like 16, 17%. My calculation for your pre-tax profit margin from your last financial year result was 11.9% compared to Kmart's 9.2%. What is the correct number, Mike?
You're spot on. Our sort of historical averages roll between about 11 and 13.
Okay, so I'm right and everyone else is wrong.
You're 100% right, and that is a number that we're very public. And we recognise that there is a lot of profitability, but it does come from running a very low cost operating model. We're sitting here in a warehouse. We're not sitting in a fancy office. Our team are wearing basic red shirts and aprons. We have warehouse style racking. We have concrete floors. We don't do much with the ceilings. We work very hard to build and maintain very low cost facilities, and we run our business accordingly. We're not flying around at the front of the plane. We're not staying in 5-star hotels. We work really hard to make sure that what we're doing is driving efficiency to deliver that best value to customers.
11.9 is impressive. Do you plan on raising that? Do you want to?
I'm more focused, this is a really common question that I get asked by investors. And, I think one of the things that we want to be able to demonstrate more in the future, which is really a reflection of significant investments we've made in tech and the investments we're making in supply chain, is operating leverage. So we want to be able to grow our bottom line more strongly than our top line, and we've got good plans to do that. But I've been at Bunnings for 20 years. I've almost clicked over 10 years as CEO. The thing I'm really focused on is a great business 20 and 30 years from now. There's lots of case studies of world-class retailers that don't exist anymore that were once the biggest retailers in the world. Sears, Kmart US are good examples of that. They don't exist today. I was in the US only 3 weeks ago, and I was in the Midwest states, and you saw these old shopping malls, and you can still see the word Sears, the sort of the scars of where the signage was.
Bed Bath and Beyond too.
And they're not around, right? And they lost sight of the customer. That's sort of the perspective I have. So for us, delivering good returns over the long term is better than trying to run any sort of short-term game to sort of lift your profit. For sure, we could do some very short-term things if that was our model, but actually, back to what I said right at the start, long-term investment in trust is going to deliver long-term financial results. And we've been privileged to be a part of a business that's had 31 years of non-stop growth, which is pretty unique in retailing anywhere in the world, let alone Australia and New Zealand.
Just lastly, on product range, how is Bunnings now able to flex its massive scale, given the growth that it's had in sourcing, to get better range product exclusively, potentially at lower wholesale prices?
I think, exclusivity is an interesting thing. Every retailer that I know has something exclusive. And there's a lot of conversation, particularly in Australian business, around the exclusivity of products at Bunnings.
Do you think that matters?
No, I think it creates differentiation. I think it's a really good thing. And, you know, if you shop at Mitre 10 or you shop at Bunnings or you shop at Total Tools or wherever it is, you will see differentiated product based on brand or even pack size. And supermarkets are world class at this, right? One supermarket will have a 400ml bottle of something and the other supermarket will have a 375ml. And it's really down to the consumer to work out where the best value is. So, you know, the warehouse format does allow us to buy in bulk. Where it makes sense to have an exclusive partnership, it's a really good thing because it does let us differentiate. But then on the broader sourcing piece, you know, we are clear and we've been very clear with our suppliers that where it makes sense, us getting as close to the factory as we possibly can is good for our customer. We can buy better, we can buy better volumes, we can secure supply chains, but it's only on some products. And one of the things that we know both Aussies and Kiwis love is brands. And, you know, one of the things that we are very proud of is being a house of brands. You'll see it as you walk out the door of our store. We've got big banners that showcase and celebrate the brand partners we've had for a very long time. And they play a really important role, and they bring innovation into the market, they bring differentiation and a lot of deep customer trust. But if you're buying a basic screwdriver, you're buying a basic paintbrush, or you're buying a basic pack of screws, the customer probably doesn't care as much about the brand. It's a commodity and they're going to...
More price driven.
Yeah, but in some categories which are commodity, I think about pet care and cleaning, brands still matter because customers have a lot of trust in a brand like Jif or a brand like Pedigree in dog food, and we want to make sure we're honouring that. But where it makes sense, we'll also go direct and have both private label and directly sourced product as well. When you're a warehouse format like Bunnings, you can sell in bulk, which you can see here, you can see behind you, and customers really understand the sort of value proposition that is in these products, which is fantastic. The other thing is, you know, when we've got our own private label brand, which is the Exonic, you know, when customers try this and they see the value of that, it's incredible. You know, this is, you know, what have we got here? Sort of, you know, 750 odd mils of
$1.29.
$1.29, right? And it does a great job. I use these products in my own home, and that's not a sales plug, but just one of those things where if you are prepared to sort of give some of the private label products a go, you will deliver great outcomes. But equally, you know, everyone knows some of the market leading brands like Finish, and being able to bring that in bulk is really important.
I'm pretty sure that was a sales plug, Mike.
Oh, who knows? Still,
Once a retailer, always a retailer.
100%. Yep. So
You've expanded the range and are planning to do so. You've gone homewares, as you've mentioned, and now you're also going more into automotive. Why do you think Bunnings can do these categories better than others in the market?
I don't necessarily think we can do them better, but we think that...
I mean, you wouldn't go into it if you didn't think you could, right? There must be some conviction there.
We look at the addressable market. So the way we think about things and the way I've always spoken to the market is, how do we grow the total market and then grow our ability to participate in it, rather than sort of double down on being fixated on market share in any one category. And the way we think about it, if I just stick with the consumer customer, we think about your home and we say everything from the front gate to the back fence of your home is in our field of play. And then it's a case of, do we think we've got the skills and the competency to do that well? So if I think about Manchester and bedding, we don't think we can do that well. We don't think our store format enables us to do it. But the development of our marketplace has allowed us to partner with retailers who do that well, so that our customers who are making over their bedroom can do the painting, they can do the flooring, they can do the lighting, all from Bunnings. And in the same transaction, jump online, find the products that they want to soft furnish the room and purchase those as well. So we're very disciplined in what we do. But if I sort of think about pet care as an example, you know, for many, many years, we've allowed families to bring their pets to Bunnings. You know, we want a really great feel when you come into store, and we want to be able to welcome the whole family in. And when we started looking at it and looking at the response from customers, we went, why aren't we servicing that customer, that member of the family? So that was sort of the sort of logical incrementalism that we sort of applied in our thinking. Other times we look at global trends. You know, we've seen our global peers substantially increase cleaning as a category. We spent time talking to them, understanding what worked, what were the risks, and then identified that not only have we got consumer cleaners, but we've got commercial cleaners, and our ability to sell in bulk drives real value for both customers. So there's a lot of method in the madness, if you like, in terms of how we go about things. So we don't just wake up and say this is where we're going to go. You know, home security, home automation, home electrification, solar. You know, we live in a great part of the world for solar. The rise of electric vehicles means there's needs around the home for charging vehicles and all those sorts of things. So we're always looking at where our customers are going and wanting to be there to meet them on that journey.
So it sounds like those range expansion decisions are purely driven by what the consumer or the shopper may be looking for and also need while they're in store, as opposed to potentially what other categories are in demand in the market that you think you can pull in.
We've got enormous velocity both through our stores and our digital platforms. I think, outside of probably Amazon here in Australia, the Bunnings website, is probably hit more than anything else. We have hundreds and hundreds of thousands of sessions every month going through our website. We have tens of thousands of customers shopping our stores. I'm pretty certain that if we, picked a basic product and put pallets of it in our store, just the velocity of customer traffic would drive sales. So pallets of Coca-Cola or something like that. But it's not core to what we're doing. That's not going to make your home a better home. That's just being opportunistic. And we don't want to disrespect our customers by doing it. So we're very measured, very rational, very commercial. It's the same as when we expand our store footprint. We're not going into markets for the sake of going into a market. We're going to a market because population growth suggests to us that there is going to be the need for multiple players in a market to service those needs. So we're very rational, we're very disciplined, we're very strict on how we allocate capital to get the best possible returns, rather than doing it sort of irrational or certainly not anti-competitive.
You mentioned bedding is probably off the table. Is any other category safe from Bunnings?
Oh, look, I think there's as I said before, we're very disciplined, front gate to back fence, right? If I think on the commercial side, the scope is similar. We're not in the business of trying to service the sort of infrastructure build or the large office build or the hotel build. So we know where we think we can play. The thing that I don't know is where our customer will be in 5 or 10 years' time. We sell products in 2025 that weren't in existence 5 years ago, all smart home products. You saw the products that I'm buying. I'm buying some security cameras and some garden lights. And the garden lights were all going to run off my mobile phone. A decade ago, you just couldn't do that. A decade ago, you couldn't do that job yourself. You had to bring an electrician in, dig your cables about at 1.2 metres underground and get it all certified. I can lay this under my mulch, plug it in, tune it up to my mobile phone, and away you go. We know that our customers are going to electrify their homes more. They want to save on energy. So we can see those trends. And again, we want to be there. So you never want to be categorical and say, we'll never do something. But equally, I don't know where the customer will go in the next 5, 10, 20 years. And we'll keep looking, listening, learning, and responding accordingly.
As you expand your range into more categories like automotive or cleaning products, you also open yourself up to more competition from other retailers in those categories. Much has been made of Bunnings' market power and its potential use of that, specifically in Australia, less so in New Zealand, but given the regulatory situation over there, I'm sure your eyes are on that, certainly. What's your description of Bunnings' market position in both markets?
I think, we've been very transparent about how we calculate market share and what our market share is. So we see across Australia and New Zealand, our total addressable market is 110 billion Australian dollars. And our revenue last year was 19.2 and change, right?
So you reckon you're under 20%?
Under 20%. Now, some categories might be a bit higher, some might be a bit lower, but we're able to demonstrate to the regulators how we calculate that share. And then how we calculate, obviously, our performance as well.
Would you mind explaining that here, what you include and exclude in that market share
calculation? It's quite a complex calculation, but we obviously look at individual categories. So if I take pet care as an example, when we did the analysis of the pet care market, we saw that in Australia alone, it was a $10 billion market in total. That includes veterinary, it includes grooming and all sorts of things, and we use lots of different data points to get that. We then sort of carved out a subset of that and said it's a $6 billion market that is addressable to Bunnings, which is accessories, shelter, food, cleaning, non-specialist, treats and those sorts of things. Because what we don't want is you bringing your favourite family member, who's usually the four-legged one in here, and having a team member give the best service they can, but maybe just not quite get it right and sell you a product that isn't great for your pet. So we tend to sort of stick to the safe centre, if you like, on those sorts of things. But when you think about a market that's $6 billion, you want to see more competition. Customers want to see more competition. What always disappoints me is when our competitors use other mechanisms to compete. So the way we want to compete is...
Like what?
Well, we want to bring the best value to market. We want the best products. We don't believe that running to a politician or putting things into the media to sort of create different perspectives is a healthy way to compete. We think the best form of competition is to put our products and services openly and transparently in front of the customer, let our competitors do the same thing, and our customers will choose, I should say. And we get that every day. We get customers who will buy some things from Bunnings and they'll buy other things from a specialist or a boutique or another player because the service is better, the store's more convenient. Even team that work at Bunnings, I'm sure, shop at competitors when it's more convenient because sometimes you just need that light bulb or you need whatever it is, and you might grab it from the supermarket or you might grab it from a hardware store, you might not grab it from Bunnings. People are just practical, but on balance, if we get the fundamentals right, we at least put ourselves in the position to be chosen. If you're doing a renovation on your home, you and your partner do that, I'd argue that you could probably buy 80-90% of everything you need from Bunnings or nothing at all. That's how competitive the market is, and to sort of suggest that Bunnings has some sort of significant share that others don't is just a mischaracterisation because we can demonstrate the size of market. And I think it's better understood in New Zealand where you've got big box A, big box B and big box C. In Australia, for a variety of different reasons, Bunnings has emerged as a big box format that has been more resilient than others. It doesn't mean that in the future there won't be another big box format or a different type of competitor, but it is a fiercely competitive market, and we just see it from the number of price reactions we have to make, every week in respect of how competitive the market is. In categories like cleaning, automotive, smart home, you'll now see it rolling out into our stores electronic shelf labelling because the price changes are so consistent that it's more productive and more efficient for our store team to let that happen centrally than have to run around and put up new pricing labels. We talked earlier about brand and brand trust. One of the things that I know is that millions of Australians and New Zealanders through their superannuation or pension funds or as direct shareholders are shareholders of our parent company, Wesfarmers. But so many of our communities are social shareholders in our brand. They have an opinion, whether that's they love us or hate us, and everything in between, but there's always an opinion. And I'm always really humbled when people ask me where I work and I say I work at Bunnings, that the most common question isn't what job I do, it's what store I work at. And I think it speaks to the really deep community connection that our teams have with community. And then you hear all the good things and the bad things about the business, which is fantastic as well. So
I've heard you say somewhere else that when somebody asks you where you work and you just say, I work at Bunnings, you don't tell them your job
100%.
title.
Yeah, it's interesting, and I've said this many times, it's a privilege to lead the team at Bunnings, it's a privilege to be a Bunnings team member. But of all the job titles I have in the world, being the managing director of Bunnings isn't the most important one. Being a good dad, being a good husband, they're all much more important. And I think we all want to have a life outside of work as well, and you don't want to be defined by it. But to work for a business that you're proud to work for, that's something that's really special.
You can never get rid of the Bunnings snag, right?
No, it's part of.
You're never allowed to axe that. It's like the Kiwi and Australian Costco hot dog.
And it's a powerful community tool. It was in our last financial year, I think it was north of $60 million raised in community barbecues.
And all of that goes towards
100% goes to the charity. So everything you make on the day you take, you've got your costs of anything that you've bought, but just by being there, if you're a local rugby club or netball club or footy club or scouts or school, particularly in our larger trading stores, you can clear a couple of $1,000s on a Saturday or a Sunday. And when you're working with small community groups, and I've done a lot of that as my kids have grown up, that can be the difference between the club making it for the season or not making it, or paying the fees for kids that can't afford it, or equipment that the club needs. So it's a really nice thing to be able to do.
Are you sneaking to a store on a Saturday or Sunday to do some quality control on the snag up front?
I go to 2 or 3 stores every weekend, partly because I love to talk to team. I love to sort of have a bit of a look at what's going on. The sausage sizzle is definitely a part of that. If there was a big Friday night or Saturday night, it might be 2 sausages as well. So, yeah.
Fantastic. Might see you around.
You may well do. Exactly.
Thank you so much for your time.
My pleasure. Thank you. It's been wonderful. Cheers.